Alright traders, hey, I want to do a very short video today. I was about to send out an update to our Pro Signals Direct customers and our Mirror Trader customers. We had a profitable day for both, and we entered some trades, and we had a bit of a whipsaw today. And if you remember yesterday, I sent out an email to everybody explaining that today was going to be a crazy day. We had a tremendous number of news announcements, a lot of Eurozone news coming out. Draghi was going to speak about the euro, and he was speaking about particularly the rally in the euro that's been going on. So look at a weekly chart here. You can see here since July of 2012 that the euro has rallied. How many pips are we looking at here? It went all the way up to 137, so 1,700 pips. Okay, had a pullback to about the 62% retracement and then continue pulling its way back up. But the euro has been strengthening tremendously against the dollar. Now, why is that a good thing or a bad thing? Well, obviously, the biggest issue that they're running into, and here's what happened today with today's news announcements. If you go to forextofactory.com and you look at today's news announcements, which is February 7th, 2013, you'll see that the news that came out of the Eurozone was good. Everything that came out again for the euro wasn't bad. It was fine, which should have actually boosted the euro up even higher. But here's what happened. Draghi went on and spoke about the fact that they have no worries about the euro the way it's going, but if it continues to rally like it has been, then they might have to look into it. Why? Because that's inflation. If the value of the euro continues to fly up, what's going on is inflation will start becoming a problem in the Eurozone, and what will they have to do? They will have to intervene with the banks, cut some strings, do what they have to do to force the value of the euro down to balance it back out. So investors across the globe and traders alike hear this. What do? They're already thinking in advance. They don't want the euro going up any higher. It's time to dump. And out of emotional response, everybody dumped the euro. And here's what happened. In a matter of 3 hours, let me zoom this in, the euro dumps over 200 pips. All right, and so so here's where we were at. Just as of this morning, okay. Let's go back to the 4-hour chart. As of this morning, we had taken a trade yesterday, right at 35.05. Okay. Right around this range here. It's not going to be perfect here, but right around this line, which had a nice solid base, right above the 3,500 mark. Price was up, went all the way up to the monthly M3 support pivot point, and it went all the way to 35.80. By the time I woke up this morning, the price had rallied strongly, but I knew we had these Eurozone news announcements coming out, and if it came out super great with the euro, well, it could go in our direction. We could have shot up 200 pips. That would have been wonderful. But my number one goal was always to protect my downside, and so I knew that we need to get out of this trade as soon as possible. So I closed out. By the time I closed out, it had already ticked its way down, probably around this area here, and it was I don't have the numbers directly in front of me, but it was 60-something pips that we closed out on that trade. I think it was 63 pips is what I closed out, and then I sent that email out to our Pro Signals customers to close the trade out in profit, and we're going to wait. Now, we did have an additional order to buy the euro at 134.35, which 134.25 was the real number I wanted. So we did a few pips above to count for spread. So right around this base, you see how there was a nice little support level here. I expected if price would come out down to that level, we'd have a nice run up. Well, it blew past it. We're still in the trade. So we have not stopped out. It's down about we're 35, almost 40 pips right now. It's just a hair under 40 pips, and we have a 90 pip stop loss. So we're almost 50% through this trade. Now we are seeing over the 4-hour chart. Let's look at the 1-hour chart. So here's what I see. Here's what I'm looking at right now to show you why we're about to do what we're going to do. We're sitting at a solid base level. We're right at the monthly pivot. The day's news has pushed down, and it seems that everybody's chilled out a bit based on the 1 hour. And you can see that prices, the downward pressure is easing. Now it could be just because of the time of the day, and then tomorrow when the market hits again, it'll continue down. We need to protect this trade from doing that. And part of my new training course that we're putting together, in fact, we're launching tomorrow the first parts of it, and one of those is the equity management section. I've completely revamped the entire equity management section. One of the first things I added and I've changed is reducing our losses by trying to allow our trades not to go full stop. So if we have a trade that has a 2-to-1 risk to reward, and if it starts going against us, how do we get out of the trade sooner so we don't risk our entire percent? What if it's a 1%, 2%, whatever you're risking? So what I'm looking at here is I still believe long term that the euro has got a lot of strength against the US dollar. I think the euro's got a tremendous amount of strength against the yen and the pound especially, which is why we are in a we jumped into a euro yen trade today too. But I want to show you what I'm looking at. Let's look at the weekly chart first of all. Weekly chart is still showing up, up, up. We did have, as of this week, because of today, a huge downward push. Same thing here, but we are sitting at a base. This 134 level is a decent, solid support level. And let's go to the 4-hour chart. We are sitting at the monthly pivot. Now, we got to look at support levels. And remember we talked about that support becomes resistance, resistance becomes support. If this pair slowly can drift its way back up and everybody's emotional sell-off starts to ease off, we could see this thing over the next few days continues to work its way back up. In the worst case scenario, we close it out at break even or we get some profits out of it. But my number one concern is what if it just keeps on going? What if this candle forming right now on this 4-hour chart is really the fact that this downward pressure can't go straight down forever? And what if the reality is this thing's going to ease up, like on the 1-hour chart, like I just showed you, ease up, which happens all the time, ease up, ease up, ease up, because it's the time of the day it is. It's almost 3 o'clock in the afternoon Central Time right now. Okay, and boom, the market just keeps on going. Well, I want to protect this trade from getting stopped out, so we're gonna make some adjustments on some key levels. Now, right now we're sitting on the 1-hour chart on the M1 weekly level. Or actually, this is a solid level, the M1 weekly. And on the 4-hour chart, you can see the M1. I don't have the M1 weekly in here. I have the monthlies on this one. The monthly pivot, we're sitting right at the monthly pivot. So we have a confluence of events 3 times. One, we have the figure, which is 13400. Okay, you can see price is sitting here at 133.98. It keeps trying to pump up between 134. We want this currency pair to go up above 13400 and hold. If we can do that, then this thing is going to start easing its way up. If it cannot hold above 13400, it starts breaking up some of these other small levels, then we are going to see this thing continue down. And so we have 13400 as a key level. We have the monthly pivot, which is at 133.88 as the key level. And on the 1-hour chart, which I have the weekly pivots, we have the M1 weekly at 133.78. So what's that mean? If price breaks down between lower and stays lower than 13400, and right now this is 13400, guys. Price is not wanting to break. Now right now this is what's 13400. You see that just shifted? It's having a difficult time breaking above it. But look at these candles. These are 1-hour candles. These 1-hour candles mean it is trying to push its way up. If you have these wicks like this, it is trying to push its way up. It's trying to. So we're going to give this trade the benefit of the doubt, but we're not going to allow this thing to go down to 133.45 and stop us out at a 90 pip stop. I'm just not going to let it happen. So if price will not break above 13400, so 13400 does not hold, and the M1 weekly at 133.78 does not hold, and the monthly pivot of 133.88 does not hold, this thing's got 3 support levels holding this thing. If those 3 things do not hold, it's going to continue down. I can expect this thing to continue rocking down. Okay, so here's what we're going to do. We are going to move our stop to the we're going to move it up 30 pips. Okay, so if you're risking 1% with the 90 pips, you're only going to be risking 60 pips. Okay, so we're going to move our stop on this trade to 133.75. Okay, so if this pair comes down another 13, 15 pips, we're just dumping it. Better off to get off. If you're risking 1% like I am, you're only risking 0.75%. You're not even risking. You're risking 0.75%. Okay, so one strategy I've been really working on, and this is in the new course, is we're going to start removing our risk and shortening our stop. Let's say we have a trade with a 100 pip stop. Once the market has reacted at some certain point, we're going to go down to lower time frames and change the stops to tighten up the stops so that we can remove risk from the trade. If we're going to take losses, we take smaller losses, and we're going to let our winners run a little bit harder. So we're going to be moving the stop to 133.75 on this pair. Okay, now let's go back and look at, we also entered 2 market orders. These were very quick moving orders. In fact, by the time I got into these orders, the price had dropped down. I got into these orders right around 12500 or slightly just a few pips above. It dropped down a little bit more and continued. Now, here's what I'm looking at on this trade. Number one, we already getting a lot of negative news out of the euro, but the euro I still see still strong against the yen. Regardless of what the euro is going on, the yen is extremely weak right now. And so we have a little bit of a base. I'll zoom this in a little bit. That has formed here. In fact, what day was this? This is a couple days ago. On the 5th, we had a low here of 124.01. Wow, is that low? I didn't realize it was that low. I may want to go down to a shorter time frame, because what I'm wanting to do is literally pull some, is reduce my risk on this trade as well. Now we're up right now a pretty good amount of pips. Now this trade, here's the cool thing. Over that 4-hour period, this trade came down to as low as 124.50. All right. So when that thing came down to 124.50, you as a customer, if you're a Pro Signals direct customer, you may have gotten into that price. When I told you to buy at 12500, the price kept dropping down after that. So by the time you got the email and checked your email, actually got online, you may have been 15-20 minutes later, you actually probably had a chance to get in that trade at a deeper level, which is good, which means you're even up even more pips. Now you can see that this thing, it's working its way back up. So what I'm going to do on this thing is to trim the fat to cut my risk level down. We have a key level here at 124. Key level here at 123. I don't know if we're going to be able to remove anything from this trade, because this thing went down as far as let's cut this out real quick. I'm going to find out what the low was on this thing, and that was the one on the 5th. Okay, that was the 124. So what I'm trying to do right now is reduce my risk by going to lower time frames and finding some support levels. See, the biggest support level is at 124 level. So I think with this trade, we're going to go ahead and keep it. You know what I'm going to do? Actually, I'm going to take this level right here, the 124.50, and we're going to move that stop to 124.30. Because, and here's the reason why. If euro sentiment, and what is the sentiment? The feelings that investors are getting about the euro continue to back off. Okay, now this thing dropped down 300 pips today and now is up 100. Okay, so price would have to move from where it is now in profit, okay, down 100 pips. If price moved down to 124.40, forget it. I'm just going to dump the trade, and then we'll be looking for a new entry, because I still think long term the euro against the yen, the euro against the Aussie, the euro against the pound are going to be strengthening, and I'm looking for opportunities to dips. And remember, we want to buy the dips in an uptrend. This thing's been uptrending very, very strong, so we're looking for those opportunities. So for on this trade, we're going to move our stop to 124.30. I'm trying to reduce risk. Right now we're at 123.80, so we're cutting the risk on this trade in half. Okay. By doing that. So if a trade went against us, we're talking about, for me, it's a 0.5% trade, 0.5% lost. And now on the Aussie Yen, which is my favorite pair, always will be. We had the same thing. We've been buying this pair, doing quite well, and let's go to a different time. We didn't have as much of a sell-off on this one. This was just a normal push down on the Aussie, and you can see over the last several days, prices come down to the 9,600 mark a lot. We've sold and bought and sold this thing a few times. I think 3 different times. I think Mirror Trader customers bought it here. We closed up in here, and then Pro Signals direct customers bought it here. We already closed out the trade yesterday. I think part of it closed out this morning. And when it came back to 9,600, I bought it again. Now, the Eurozone news does affect the Aussie Yen, and this has to do with a different training we'll get into. But we're talking about whether the environment is a risk on or risk off environment. When people are hating the US dollar, the Aussie Yen rallies like crazy. This is when people get more into risk, investing into risk. They invest into the Aussie Yen. Okay, and so it affected how if we did have a sharp drawdown today, not drawdown but push down. That went not too bad, about 100 pips. It wasn't that big of a run. Down into a nice entry at 19600. And we're going to go ahead and keep that trade on as it is. I am going to tighten up that stop a little bit to, let's see here, below these lows to 95.70. So again, now instead of it being, if you're risking 1% on all your trades, and instead of, if the market, because of the market news was so immense today in the Eurozone, and the reaction was so immense, tomorrow it could continue, and we could see a drop on all three of these trades. If you have 1% risk, you could lose 3%. Well, we're trying to avoid that. If the market is going to continue to drop, let's risk less. The Euro USD, I'm going to end up risking 0.75, but the other trades combined would be about 1%. So we're talking about 1.75% instead of 3%. Again, the key is to remove the risk from the trades as fast as possible, and give our trades a chance to what was I trying to say? I lost my train of thought. Anyway, we want to reduce the risk. It makes our losses smaller and our wins bigger. And so this is one of the strategies we're going to be using a lot, is once a trade starts moving towards us, we're going to start reducing our risk. Okay? Like, for instance, the Euro Yen. Okay, now let's take this trade again on a 4-hour chart. This thing already moved 300 pips, is already moved back up 100. Why would you risk a stop loss that's all the way down in here for it to drop another 200 pips? If the thing starts moving that direction, we should have been long out of that trade. Okay, wait for it to continue to move down so we can find another buy entry at a deeper level. So we're going to cut our losses down. Our stop to a pushed up to a higher level from 123.80 to whatever that number is I just said I was going to do. 124, right above the 12400 mark. So in there. So anyway, that's what we're going to be working on. So anyway, this video will be right along with the Pro Signals Direct members, and we'll send this out to Mirror Trader customers as well. And we'll talk to you tomorrow.